Aloha and welcome to Java. Thank you for joining me. Today is August 20th, 2024. It's Tuesday. We had a nice surprise yesterday seeing Greg coming back. So that was nice for those of you that I got to see in the live. So today we've got a few things going on. This picture here is something of Germany and then a little bit more later. So going right into the markets as we always do. Let's look at our favored risk indicator is 244.7, the MMRI. So stable yesterday did follow through with the green that we were looking at. There weren't a lot of factors. So basically the market is being left to run as it will, if you would. This morning we're looking at a bit more green, not really too many hindrances, a couple of things in earnings, but not much all in all. So with this, the two main factors that make up the MMRI are the 10-year yield and the relative strength of the dollar. Now, take a look at the relative strength of the dollar is now below 102. Hasn't happened in a while. So with the weakness in these two, that's part of what let it run into the markets. As I was saying yesterday, weaker US dollar means that prices go up, and that includes the prices of stock. So with this, we've also got cryptocurrencies went up in price as well. Bitcoin back above $60,000 level. So we're watching assets go up. However, got a little bit of weakness starting to show up this morning early. We've got the futures are showing just a little bit level, not too much, but just showing that it might be running out of steam a bit, if you will. Nothing goes straight up in a straight line, so it's got a little bit of a pullback. Still green, but I think that these bulls are basically running a little bit out of powder for buying all of these dips. Now, the fear greed meter is at 44, running into the neutral territory, heading towards more greed. So with this, it looks like the probabilities that the market will continue today might be a bit of weakness or leveling off, a bit more of a chop zone, looking more towards Thursday, really. Wednesday afternoon with the reports, and then Thursday. We'll go into that in a bit. So I put this in as a bit of a reminder, or for those of you that may not know, the Bretton Woods system, if you're not familiar with this, was basically established after World War II. Okay, and this basically pegged other currencies, foreign currencies, to the US dollar on the trust that the US dollar would stay pegged to gold. In the past couple of days, I've been talking about how with the Nixon shock, it became unpegged to gold in 1971. So, as this is saying, in the late 1960s, a system began having issues, and US kept running persistent balance of payment deficits, meaning they kept going into debt further and further, as they're continuing now. So this drained out the US gold reserves, and that's why they decided to cut those ties so they could freely inflate the money supply further, as the government, or the Federal Reserve, so to speak, felt necessary to control the economy and inflation. So regardless of what they say that it's for, it's basically creating more inflation. That's why stocks have gone up. It's basically an indicator of the value of the dollar going down. Do expect this trend to continue? As I said, doesn't go in a straight line. However, with this, we've got more strength in the markets. It looks like coming at least until Powell speaks, and then they're expecting more. That will probably be a buy the rumor, sell the news type of event, because I believe the market is overpricing a bit in these rate cuts. So when that happens, could pull back actually once it's announced. So with this, we've also been talking about the relative strength of foreign currencies and their markets, because overall, that will affect the prices as it affects trade, and almost none of the goods that you use any longer are created or manufactured in the United States. So very important, in my opinion, to understand these dynamics. as it fluctuates and how it's going to affect us moving forward. All of this ties down in a base, not just to the currency, but the ultimate currency, which is really energy. Okay, so with this, let's go into the calendar today. We've got a couple of Fed members again speaking. They're doing the weekly crude oil stock, but really don't expect any shock from any of this. With our earnings reports, we're looking at Lowe's. They look like they're coming in a bit weak, as well as Target and Macy's for the retail sales to see what's actually going on there. So, with all of this, everyone's green and giddy about the market because stocks are now on their longest winning streak of the year. So, in general, that is, as I said, nothing goes in a straight line. So, pullback time, looking a bit weak. So, just a bit caution on your trades today. So, on the other side, with the currencies tying in and all of the global monetary systems being related more and more, we've got the Koreans expecting hotter home prices with the central bank set to meet. Now, we've got central banks collaborating regardless of what they say. And I believe it looks like there's very strong evidence that with Japan and the yen adjusting, that Korea was taking a bit of that heat off. So now they're going to see more inflation because of this, and that includes with their home prices. So I just want to bring this up because this shows a bit of that balance and how it's all intertied. So all of the inexpensive things that Americans have been enjoying because of the trade imbalances basically could shift in the very near future. Okay, I'd like to go to the real economy because this is what is happening in the underlying. There is a record number of home buyers now, almost 60,000 that backed out of deals. This is in July alone. What does this mean? It means that this is the number of people that went into contract to sell their homes and then it never happened. They backed out of it, cancelled the agreement, and did not do the purchase. This is not bullish for housing. So, along with this, we've got a lot more Americans worried that they're going to lose their jobs. And right after I put that report up, I saw that General Motors is slashing more jobs. Now, with these layoffs, they're basically talking about their cost cutting that we've been speaking about with corporations. The ones that will survive are going to be cutting their costs moving forward. That means cutting jobs. So, with that, of course, shares of GM shot up and they're up over 26%, almost 27% for the year. So just absolutely annihilating the middle class because now the job's going out as well. So with this, we were just speaking about Lowe's. They just cut their guidance on soft spending on do-it-yourself projects, and then also, as we were talking about, home projects, improving the houses and putting money into the homes and not seeing the value. This is a spending warning again for consumers pulling back. So the real economy is hurting. Otherwise, the Fed wouldn't need to cut rates. So all of this uh, talk about it's really propaganda, is what it is, about the economy being strong. It's not true. If it was truly strong, they would not need to cut rates. Okay. What is this all moving towards? This is all moving towards centralization and the CBDC, central bank digital currency. Okay, this is going to be across the West, and that will include basically the Euro, Germany, UK. All right, and then in the East, we've also got South Korea and Japan that will be tied in with this to start with. So with this, I wanted to bring in, there's a couple of stories with Germany. They're starting to put out a bit more propaganda because they are the weak point about their economy avoiding a recession and that their wage growth is really strong, and that's giving the ECB an issue with more inflation. So they're talking about pulling back on their cutting rates. And really, the story behind it is that they have to stay basically in a lockstep pattern with the other central banks so they don't fly off with any individual currency. Okay, a little bit more about the central bank digital currency. How is this going to be adopted? Well, we've got this is, to me, and personally, very sad story. Vets, this means veterans of the armed forces, may see only a small cost of living boost in benefits this next year. As a matter of fact, the recipients of Social Security checks, this for the elderly, and veterans benefits would see an adjustment of less than 3% for 2025. This is the lowest since prior to the C-19 cough issue. So, what's happening here? Well, if the figure that they're actually looking at for the cost of living that they're raising and the amount they're paying is around 2.6%, if inflation is more than this, it means the pay that they're giving them is going down. It's not going to be very long. They won't be able to afford cost of living, and more of them will be out, basically homeless on the streets, and more subsidies. Well, you have to take subsidies if they're giving you via a government's central digital currency. So that will force adoption. With this, a couple of other things. Just since the last day or so, there was another key bridge that uh, Ukraine basically obliterated. The president of the other side isn't very happy, and so they're talking about some more basically retaliation going back and forth. My point of this is just that these wars are going to continue, and the United States wants them to continue because this continues with the GDP, the growth, and their production. Okay, we're on a war machine super cycle, and this is because the economy is now in a down cycle. So, with all of this, it's got to come from somewhere with that balance coming out between the currencies. We're exporting our propaganda as well as the inflation, and we're starting to see the effects of that. So, with this, I wanted to start with my last story for you. And this is a letter in a bottle. I thought this was very cute. It was written by a sailor in the Navy at a Virginia base back in 1945, and they just found this after this latest hurricane. So, that message in a bottle, never too late. There is always hope. So, with that, we're here for each other. Just want to remind you of this. There will be continued inflation and other things happening with this. But there is bright side at the end of this and a large amount of opportunity. So with this, I wish you all a wonderful day, trading day. And until I see you again, of course, my friends, stay free.